Apologies. We seem to have computer problems this morning. And while David sorts himself out, right? As I mentioned earlier about the Chinese data, let me just have a quick look at Forex Factory. Here we are. Where are we? There we are. And we can see here. This was the item of news that the market was been waiting for. This is the manufacturing PMI and the non-manufacturing number from China. 50 is the inflection point, if you like. So, for example, anything over 50, as we can see here, is considered a positive. It means the economy is moving forward, as it were. Obviously, this is the result of the virus, and we can see here there's been a bounce back in China and a little bit of but it's according to this number, it's holding steady, which is going to point the way to a recovery in the world economy as well. What happens with that, as I said, we look at the Aussie, and we can see that here on the CSI. The Aussie up until then had actually been rising because the indices have always been have been holding up. The Nasdaq has certainly been leading the way, and as I mentioned earlier, with related markets, we look at the US indices for market sentiment, in particular the S&P 500. But there has been divergence. What I said earlier, I said we look across, we do this cross-market analysis, and we look at the cross-market analysis for confirmation or otherwise of what we're seeing in the forex, and forex acts in the same way if for index traders. But you will see a divergence. You will see that potentially, if we've seen here, let me just have a look. That's the volatility. Where have we here? Well, we've got the S&P 500. That's actually come off a little bit. The Nasdaq has been really, in a world of its own. Now, you do get you do get these divergences, and there have been times when the indices have been moving higher, particularly, as I said, the Nasdaq, but the yen has been bought, and you can look at that and you think, oh, well, hold on, if the indices are going higher, why is the yen being bought? It should actually be sold, because it can happen that the forex can actually move before in terms of sentiment. So you'll tend to find that yes, the yen has been bought, and then suddenly you may get a reversal. It may only be temporary in the indices, and sentiment will suddenly change. And we can see here sentiment has suddenly, for whatever reason, the Nasdaq, it was over at top of 22, and now it's taken not a bit of a swan dive, but it has reversed suddenly. The news hitting the wires to do with the virus, the control of the virus, the whether economies are going to reopen and life can return to some kind of normality. That is really what is driving the markets at the moment. The fundamental news is there, but it's kind of, yeah, well, it's awfully interesting, but are we going to get a second wave? Is this, are we going to get some kind of handle on what is happening, as I said, to do with the economy and with the economies, and that can cause its own instability. And just by looking at the Nasdaq, we can see here it's gone from 22 down to 5, and the S&P has also moving now. I don't have the YM futures up here, but the YM futures, which is the futures for the Dow Jones, they would also be moving. There's a post on my website about the Dow. Really, that's really been lagging. The market tends to pay attention certainly to the S&P and certainly to the Nasdaq, because that has been so out of kilter. One reason is because the Nasdaq is full of tech companies, and in this pandemic is the tech companies, we need technology, and they have been doing really, really well. So if we go to have a look at what is happening on our CSI, and this is what I mean about the divergence, that the yen has actually been bought, and you think, well, it was being bought even as the indices were, looking to be, fairly steady, as it were. And this is what I'm saying. You still have to have them up. You still have to have a look at when they move in lockstep. It's fantastic. Then you really, really know you're on solid ground. But you do you will have periods when you have this divergences. And the pair that I suppose that really is a proxy for this kind of risk is, as we can see here, is the Aussie yen. And in fact, the Aussie has subsequently turned over quite strongly on since the good news from the China PMI data, and in fact the yen has been bought. So that's how you can explain, that's how you have to understand these cross-market relationships. Yes, they exist. Yes, there will be divergences. Sometimes one market will lead another. Our opinion, our view is that it is the forex market where you will see this switch of sentiment the fastest. It is the money market, it is the flows going into these currencies, tell us instantly whether sentiment has changed or whether sentiment possibly is about to change.